everyone. Welcome to my episode. I'm Ellie Perlman, your host, and today I'm going to talk about resilience, which is a topic that I find fascinating. And really, the angle today is why operators who survived 2022 to 2025, 2026 will own the next decade. It's been a rocky, I would say 3 to 4 years, and I've seen a lot of changes from where I'm sitting as an operator. I've seen companies start and close, open, and I've seen people that operated assets and just moved to another country or started doing something different altogether. And so I wanted to talk a little bit about what is resilience and in specifically in investing and in real estate from where I'm sitting after, establishing Blue Lake about a decade ago and doing almost 1 billion in transactions and kind of the lessons that I've learned and also share a little bit about my background and hopefully all of it will come together because I do think that resilience is not something that you can learn. You can get better at it, but it's something I think you're kind of born with, and life will teach you that in early days. And so this is something that you take with you, whether you passively invest, actively invest, manage assets for other investors, etc. And so I want to start from the very beginning. And I used to run another podcast that we have discontinued. And one of the first episodes there is essentially talking about my origin story, which, I think for anyone who's listening or watching, if you're watching this on YouTube, before you invest with someone, I would highly recommend to do some research to understand their origin story. And I mean, compare, everyone is comfortable sharing at least some of it. And I'm an open book. And so I think it's really important to know who is managing your money, who you're investing with, who is your partner. And I think if you can understand their origin story, that's extremely helpful. And so, I'm 44 years old. I was born and raised in Israel. And to me, uncertainty was essentially the default. I was born to a very, very poor family where we were at the bottom of the food chain, so to speak. And I've learned from a very young age to defend myself because kids can be pretty harsh. And I was not spared in that regard. And so my classmates made it clear to me that I was the poor kid, that I was the one getting the hand-me-down clothes. And, I remember on holidays, we would get huge boxes with food, which was, well, to me as a kid, it was huge. I actually don't know how big they were, but they had rice and oil and sugar and flour and all the necessities. And I remember how excited we were to get it because we knew that okay, now there's food for the holiday. And so um growing up back then and realizing where I was compared to others, and I was not living in a wealthy neighborhood, obviously. I was very much middle class, but learning my where I was placed and where my parents were, where, they were both former teachers. My mom got sick when I was very little and stopped working, and my dad was unemployed for about 13 or 14 years and kind of bounced between um part-time jobs. And so money was tight. Money was tight, and my parents fought really hard to keep us um as one, in the family, as one united family. And because there were times where social services actually wanted to separate the kids, us, from our parents because they couldn't provide for us financially. There was just no money. um Food, clothes, you name it. And so back then I mean I never felt sorry for myself. um and I think resilience, I think I was it's something also you were born with, but I think also life throws you curveballs, and how you react really matters. And I remember thinking, I need to create a better future for myself. And the way for me to get out of that situation was through education. So I just invested all my energy and time into school because I told myself I'm gonna make something out of myself so I don't need to be in that position again. And so resilience kind of really started at that point. I just blocked all the nasty comments, all the different songs that the kids used to sing about me as a kid, being a poor kid. As I said, it didn't matter. I just saw the one goal of using my my brain, my dedication to do something, to create something, out of my life and get out of that position. And that really shaped who I am and who I was and how I saw everything. Everything from the age of, I think, 9 or 10, everything went through that lens. When I was 9, I was cleaning homes and synagogues to help my parents make a bit of a living. And I didn't feel sorry for myself. My friends were all riding bikes and playing ball. To me, okay, that's my reality. I didn't know anything else. And so, over the years, I worked really, really hard to get into business, to law school. And I graduated on top of my class and I started working as a real estate attorney. And that's where my romance with real estate really started. Um, and fast forward after I got my license, started practicing law, I essentially around that time I started losing my eyesight, and it was a very rare and kind of scary disease. I've healed since then, but it really put a mirror in front of my face and made me really see what I was refusing to see before, which, that I wasn't happy. I wasn't happy as being an attorney, and I decided to leave that profession. I didn't really have a plan B. I just knew that I can't keep doing this. And I essentially transitioned into the operational side of real estate, which, some people will saying you're crazy, you're becoming an asset manager and chasing tenant to get rent. You work so hard to become an attorney. It's a much more rewarding, interesting job, but I didn't see it that way. And fast forward 4 or 5 years in asset management, I decided to move to the States and worked extremely, extremely hard to get into a top school here. And I remember waking up at 5:30 a.m. to study for the GMAT and then go to work and then coming back from work and between the kind of 7 or 8 p.m. till sometimes midnight, I would work again and study for the GMAT so I can get into a good business school because I wanted a reputable name organization on my resume to open up doors for me. And that name was MIT. And so I got in, which it was extremely humbling experience. When I came here to the US, I actually came with no network. I didn't have any capital, any money. I took a huge student loan of about $200,000. Um, and when I started making six figures when I graduated, but I was, of course, not enough to pay off the entire student loan. But that's how I started in the US. And shortly after I started working after graduation, I transitioned essentially to real estate, and it wasn't easy because for the first time in my life, I was making some living and I didn't have to worry about paying my bills or paying rent, etc. And it was a very new and interesting place for me. And then when I started getting comfortable, I decided to shift and start Blue Lake, and that was in 2017. And so that was essentially my path from growing up pretty poor to building Blue Lake. And I really, when I started Blue Lake, I didn't know anybody besides my first investor. And I build my reputation, build my name by doing, really hard work, flying all over the country to talk on stages and building my investor network one check at a time. And that was extremely hard, but also extremely, rewarding. And so, if you ask me what resilience actually is, I would say that it's really the ability to absorb pain without being forced to make um any decisions that you don't really want to make. Um and with Blue we buy and manage multifamily assets for investors, and we have about half a billion in AUM today. We have exited several assets in the past, and we've done pretty well on our exited deals. Um, but essentially, when it comes to resilience, if you're in a position when you're forced to sell, when you're forced to liquidate, it's essentially, if you're forced to do that, then that's where you're failing all on being resilient. It's not really about, failing as an investment. And so it's essentially it's resilience is really just a long series of small decisions not to quit. I've had many, many tough days. And as my father-in-law says, you just need to keep waking up every day and move forward and keep doing the work. Just show up. That's what you need to do. It's just all about showing up. And that's the hardest thing to do. But this is the one small, which is not so small thing that builds and maintains that resilience. So, you know, like I mentioned earlier, there are many sponsors and business owners in real estate that I know that essentially stopped showing up. And it sometimes means that they've stopped talking with their investors, or to decide to move to another company, get a job, or move to another country altogether. That actually, happened. Um, and so resilience is about showing up, making decisions, and not being forced to make a decision. And of course, treat your investors right and communicate that and show up even in hard conversations. And so, when I'm speaking with investors today, I think that the sentiment has shifted from really focusing on what returns this investment provides and shopping around and seeing which investment can give me the highest return, to which operator do I trust, which investor, which company do I trust the most to manage the investment well and to be upfront with me and open and transparent. And that is, huge. And so, in my opinion, instead of optimizing for returns, the great and sophisticated investors, they don't optimize for that. They optimize for survivability. And what it means is that you basically make the decision of who's going to be resilient, who's still going to be with his 2 feet standing for the long haul, because returns don't mean anything if you're not standing on your feet long enough to collect them. And things happen, and that's the nature of investment. And there are many killers to investments, and this is not something that I've read about in a fancy, sophisticated article. I've lived through it. I've lived through rapidly changing market conditions, and I actually tested them myself. Whether it's floating rate debt, in a rising rate environment, reserves that looked adequate but were not, etc. So the moment you realize that you bought in good faith, you did your due diligence, and you underwritten for different scenarios, but you realize the scenario you didn't model is the one that showed up. How you behave and how you operate, this is where true resilience is. Resilience is not, it's not about never getting hit. If you're investing in any vehicle, whether it's real estate, VC, the stock market, and I'm invested in all three, only real estate actively, but the other, two passively, it's impossible to never get hit. But how you show up and how you make decisions, that's what resilience is all about. And the operators that pretend that have never been tested in one of those killers that I'm going to share with you, I would say worry about them and question that, because it looks like the entire market is going through something on deals that were purchased in the last 5 years. Those who are buying now, by the way, and I'm not going to get into it right now, but in parentheses, those who are buying right now are buying, in my opinion, at the valuation of a century. We're not going to have that opportunity to buy so low in the next, I would say right now there's an 18 to 24 months window, maybe 24 months window, and it would close for about a decade. And those who are buying right now are going to increase their wealth significantly. Right now, this is the 2007 for multifamily. So the main, I would say, three killers in investments in real estate specifically, and how you react to them can show you about the quality of the resilience with the operators are those. First is the leverage, where you can't pay the debt because in a downturn, because rents are down and you don't have enough cash flow to pay the mortgage, or floating rate has doubled or increased almost overnight. That is something that can definitely kill a deal. And I know from other investors that some sponsors just stop responding to them. There's no communications coming, and they don't really know what's going on in those situations. To me, that's not being resilient. Obviously, avoiding investors not being resilient. And even if you need to make a difficult conversation and make difficult choices as a sponsor, you got to make them. And that's part of being resilient. And these conversations are not easy, but you have to make them. You get smarter, more experienced, etc., for the next cycle. But how you show up and how you behave in that when the debt doesn't work, that tells you a lot about a sponsor. Now, the second killer is concentration without conviction. So if you as an investor, as a family office, high net worth, or an institution, if you're focusing on one area without really understanding why you're doing that, that's a problem. And so, at Blue Lake, we focus and concentrate on multifamily. And our conviction is so strong. It's because home affordability is becoming an issue. It has been an issue and becoming a bigger issue every passing month, every passing year. More and more people cannot or will not buy a house. The demand drivers are solid and they're there and it's not going anywhere. And if you top to it right now, especially right now, the pricing correction that we've seen, that's a major opportunity. But we have concentration and we have conviction. And resilience is really about, again, it's not about not getting hit, but it's about how fast you adapt when you do get hit. So sponsors who were focused on office, for instance, they stayed focused on office and did not correct quickly when things changed, when things shifted. That's lack of resilience. That's just being stubborn. I'll give you an example of how we were able to correct things pretty quickly. It was March of 2020, and COVID just started making the news. And I was I'm sitting here in LA, Googling Wuhan, because Wuhan is essentially where the virus came from. And I'm sitting here Googling, that was before AI was here, flights from Wuhan to LA, and direct flights were still coming. And I was shocked. And I realized this is coming to the US. This is not a China issue or an Asia issue. I immediately called the property managers at the time and I said, listen, COVID is going to be a big issue and we need to start doubling down on our cash flow. Let's go out to everyone and tell them that we're going to give them $25 discount on rents for every month they're going to pay us in advance. And the response was nobody was saying anything about COVID. It's still too early. Operators are waiting to see what's going to happen. I said, I'm not going to wait. I'm pivoting. I'm making that pivot right now. And at that time, we were 10 to 11% cash on cash on a yearly basis because many tenants paid us in advance to capture that discount, the early birds discount. Some of them, we learned later on, some of them lost their jobs, but it didn't impact us because we already collected the funds ahead of time. So that's kind of an example of, resilience in a form of adapting faster. When you think at least you're going to get hit, because we really didn't know if we're going to sit down and stare at half empty buildings, not able to pay debt service. And so the third killer is if you don't have enough reserves for any negative scenario. So for rate hikes, for unfunded CapEx projects, etc. It's very important to have reserves. And again, we have reserves at Blue Lake, and you always have it's tricky because you have to think, okay, do I need $250,000, $750,000, $500,000? What is the right amount? It does change. And sometimes it's just not enough because in real estate, you cannot predict 100%. And there's always something that happens. Sometimes you can weather it, and sometimes it's much harder. And so resilience is coming from planning and also adjusting and adapting and making sure that you have reserves for times when you can't really project and predict what's going to happen. I've always, liked analyzing and learning how great people build their wealth, build their legacy, their name. And I'm personally, I was fascinated by Sam Zell, which I found his character to be very vivid, interesting, fascinating, smart. He was super smart. Obviously, Ray Dalio, you know, Warren Buffett. If you look at those three and you analyze what they've done, they got more conservative on the structure, meaning in terms of leverage, cash reserves, debt terms. They got a lot more conservative while they got more aggressive on their conviction. So for instance, Warren Buffett concentrated about 40% of Berkshire's Hathaway's stocks into Apple. I mean, there was a huge conviction there, right? But he's still sitting on $100 billion plus in cash, and he never uses margins. So that's a very conservative structure, even though he has a very, very strong conviction into Apple. Sam Zell, of course, he was known as the grave dancer. He was always famous. He's famous in buying assets where, distressed assets when others were very fearful. He was extremely aggressive, making a move and buying those type of, assets and real estate. But then he sold equity office properties for $39 billion or so in 2007, right before things shifted. So he was very bold on his bet, but he was conservative when it comes to financing, conservative on his structure. And I found that to be actually pretty fascinating in seeing how resilient these guys are and were and how structured, they were. So if we're shifting gears a bit to talk about where the market is right now, I think that every asset class is being stress tested right now. There's, real estate is now being stress tested when it comes to rate shocks because the debt is not what it was. And interest rates on assets that we purchased 3 to 5 years ago as a market Um, Investors are facing different debt amounts, scenarios, etc. With VC, venture has a major liquidity drought right now. A lot of investors are sitting on the sidelines. It's a little bit confusing, I can tell you, as someone who invests in venture as a passive investor. There is a feeling of AI euphoria, and it's confusing. Everything is now AI. And many investors actually kind of are sitting on the sidelines right now because it's very hard to decipher between the good, true, groundbreaking AI companies and the rest. With crypto, we had that, a reset, and a lot of people lost a lot of money there. And private credit is not what it used to be. There's cracks there. It used to be the darling child of investors, and now there's a shift away from private credit. So what I mentioned earlier, that we're essentially buying multifamily at 30, 40, 45% discount to replacement costs. That's actually after 3, 4 years of surviving hard markets. And that what had brought me to the position to be able to buy at a huge discount. Resilience actually creates optionality, and it's who can stand on their 2 feet even through the storm. And so things that I've learned is that first and foremost, transparency that's a resilience strategy. Investors many times don't see all the hard work and the struggle and everything that is being done behind the scenes, but they can see how transparent you are. And that's, in my opinion, an essential part of being resilient. Not easy sometimes to have conversations with investors. How you handle bad news. But when you're, as an investor, if you're looking to invest with a sponsor, those who are still transparent, even in hard times, these are the type of sponsors you want to invest with. And it's also very important, the other thing that I've learned is that it's important to adapt very quickly, not to stick to the original plan at all costs. That's actually a big part of being resilient. And try and protect the downside as aggressively as you can. Let the upside take care of it. Don't bet on the upside. It's the icing on the cake. But the downside is what you need to focus on. So, I started this episode talking about growing up in Israel where, I learned what lack of stability was and how I think I actually started building my resilience. And now almost a decade into building Blue Lake, I'm watching that exact mindset paying off. Keep showing up, never give up, keep moving forward. So that's why that mindset helped me and Blue Lake stay in the game and operate and make great purchases at a huge discount. We're under contract on an asset in Dallas that we purchased at over 40% discount to replacement cost. Because of Resilient, I'm in a position today where I can capture those opportunities. And many, many people and operators quit right before things start changing for them. And, I think having a really smart, capable team behind me is important. And having that resilience mindset is even more important. And being fair, of course, to investors, not taking shortcuts because there aren't any. And again, like I said before, being resilient is able to stand there long enough to reap the fruit of your labor, because sometimes it just needs more time than you think. Everything that I've gone through in my life prepared me for this stage, for the next couple of years of great opportunities at a major reset. And I can tell you that many family offices are buying right and left right now because they see the pricing. They understand that an asset that was purchased at $300,000 a door 4 years ago is now being sold for half of that. That's an opportunity they're not going to see for years to come or years from now. So if you're that kind of investor that values the deal structure, conviction, and resilience, and not just focus on the bottom line returns, which are important and they are higher than we've seen them before. But if you are one of those investors, I invite you to reach out to us. If you go to blake-capital.com, you can read a lot about us, a lot about me, and leave your information there. And one of my team members will be happy to talk to you. Because this is the type of community of investors that we're building. And this is exactly the type of investors that I'm interested personally in getting to know. Those who appreciate resilience and looking for that in the sponsor that would be partnering with them. That's it for today, guys. If you liked the podcast or any of our episodes and you believe that this brings value to you, don't forget to leave us a review and to subscribe to our podcast. That's it. Thank you, everyone. Have a great day, and I'll see you on the next episode.